Hello, trade pros at YouTube. I welcome you all to a new video with us today. And I'm going to be showing you a simple strategy using the 20-day moving average to day trade your favorite stocks, your favorite options, your favorite ETFs, whatever it may be. Now, this is a strategy that I combine with structure and understanding how the trends work. And let's get started with this video. But before we get into the intro, drop a like down below, hit that subscribe button, and drop some comments down below. What kind of systems do you guys use? What kind of maybe moving averages do you guys use? What would you like to see? Do you guys want to see a cloud moving average tutorial video? Drop that down below and we will do something of that nature. Now let's go ahead and watch this intro and get started. All right, welcome everyone. And in today's video, what we're going to be doing is breaking down the 20-day moving average on an intraday chart to day trade and to look at potential opportunity on whether it's stocks, options, or ETFs, whatever it may be. Now, I use this to trade options. I like to look at the underlying naturally and identify those parameters for the structural components on the intraday and then trade the option itself. Now, there are a few pivotal things that you're going to need for this strategy. Number one, I like to use this on a 5-minute chart. This is best used on a 5-minute chart. Now, number two, you're going to need a 20-day exponential moving average, which is this blue line right here. If I double click it on trading, you can see it's a 20-day. We can make it a different color. We can make it a different thickness, whatever you guys want, whatever you guys see better. Now, number three is going to be the pre-market movement. It's very important to understand how the market's moving and how a trend establishes. Number four, you are going to have to wait and be patient for a trend to actually establish. So you can see that this trend had its ups and downs. You can play it to the long side, upside, whatever it is. I typically like to identify a potential trend that forms around maybe an hour after the session opens and then go from there. So let's dive into this with our following steps. Now, remember, step number one was to identify the pre-market structure, which is this little area right here where the blue cuts off. You can see we are in a descending move. Now on the 5-minute chart, once we open, I typically give it a few minutes unless I look for breakouts, whatever it may be. But using this strategy, the idea is you want to break and retest and hold this 20-day moving average 5-minute as a support or resistance on the retest of it, right? Every time it retests in the direction of a trend, you will either see it hold or break. So looking at the SPY, we're going to go through a few different names here. Looking at the SPY, you can see, okay, we break down. And the first time it retests this 20-day exponential moving average was at 10:10 a.m. Now, right here, you have a sell candle, which typically I would like to use as a pullback for the short continuation. Now, number one, this was a news heavy day. Number two, it is a little too early for me to get into this trade because it's only 10:10. I want to give it maybe an hour and a half to establish something. And then you can see, okay, break and retest, and you get a long side move. Now, some traders might be interested in this. I personally, again, want to wait to see how this trend shapes up. And then finally, you get the breakdown, break, retest, right? Break, retest. You've got a few options right here to use that as a resistance point. But if we're looking at this on an overall structural move, right, we always want to keep in mind what the structure is. So if you have your pre-market tops like this, your pre-market lows, you have your day session lows, and now you have your day session tops, right? For this to be a little more bearish and continue the downside trend, I would probably want to see it actually break these lows. Right. So I'm not going to be getting short in the midst of this because I want to see a actual continuation to show me that this is going to be a strong trend to the upside or downside. Now, this is exactly why I wait for a significant amount of time for a trend to set up. Sometimes there isn't really a trend like you see right here. However, in the later afternoon, we can identify that this is a current little downtrend. And once this trend line actually breaks, what you're seeing is, number one, you had maybe two opportunities to try that retest of the 20-day moving average. Number two, what you're looking at here, when you break this area and this prior top that is supposed to be a resistance point, you're actually seeing the trend establish and start shaping up at that 20-day moving average. Right here, you're seeing the upside trend actually shift, and you're getting a 5-minute candle with a doji print at this 20-day moving average. Right here, the candle after that is a long for me. You push up, pull back, you get another green candle that forms right at that 20-day moving average on the 5-minute. The next candle is a long for me because we've broken this trend. We've made a move to the upside, even though it kind of seems a little wonky, and we're establishing more of a trend. Some people may think, okay, well, why didn't you play these areas once you broke and retested, maybe this long, this long? Well, there's no clear trend and definitive trend right here. Until this actually shapes up into the afternoon, we don't have a trend. So let's go ahead and look at this on a different day. On a different day, you can see, again, no real trend being established other than right here. If you identify the pre-market lows, then the pre-market tops, on the first hour or so, you have new tops like this, right? There's no real trend in this market for us to play off, right? You break, you come back, you get a few bullish candles, you try it, fails to make a new top, pulls back, kind of dices around until maybe the afternoon, which is a decent area to think of that long. But again, no real trend has established, right? Why don't we take a look at it here? So what we're doing on this guy is we're establishing a down trend, right? Pre-market tops, pre-market lows, right? You break the pre-market lows, you're trying to hold this, miss this move probably because there's no real trend yet. On the pullback right here, this is where the money's made, because what you're seeing right now is red candle, short it with the stops above. There's your slight little move. It doesn't look that great, but especially if you're trading options, it's really good. Again, this strategy requires a real trend to form. Now here again, downside dump, you're holding it as resistance, you have a potential area, right? But again, afternoon is when this thing shines. What's the trend here? Turns bullish, right? Not too much trending movement until the later afternoon. So after 12, you want to put more emphasis on this strategy. So if we look at a different name right here, if we look at Disney, for example, right? Disney establishing a great trend move over the past few days, right? So yesterday you get this rally, pulls back moderately into it, looking for the longs, right? And then today opens up, top, bottom, right? Breaks down, breaks back up. Okay, nothing yet. When does the trend establish? When is this trend established? Right here, after this upside moves, actually riding it out, right? Pull back into the 20-day moving average. Nice green candles. There's your long opportunity, right? So what have we noticed? We've noticed that this trend we typically want to watch until about 12, right? Eastern time. About when noon strikes, we have the opportunity to actually form a decent trade idea based on this moving average strategy, right? Caterpillar, again, Caterpillar, what are we doing? You want to wait for a trend to establish, and that happens in the afternoon. Looks kind of choppy, dicey at the beginning, right? Identify maybe a wedge, identify your tops, whatever it is. At noon, you can see, you can draw a trend line even that we are establishing more of an upward trend, right? Poorly drawn trend line, but we're establishing more of an upward trend. And what you're doing is looking for green candles to buy into this 20-day moving average. What other names do we have? We have triple Qs, right? Again, right here, maybe at the beginning, you're establishing some shorts on the break, but where is the trend shaping up? Right afternoon. You break these levels, longs, shorts, shorts. So remember, around 12, that's when you can identify maybe a trend has been established in this stock. What other stocks are there? PayPal, QS, whatever it is, right? No real trend here. Maybe on the other days, right? So we gap lower, pull back into it, nothing yet, right? Pull back into it, little short, doesn't really break the lows. It's still a decent opportunity, right? What do we have here, right? Trend establishes after these lows are broken, pull back into that 20-day moving average. Those are your shorts, right? Maybe Snap. Snapchat here rides it pretty well throughout the day. You can see kind of a dead trend. Okay, finally breaks, pulls back in that 20-day EMA, pop. Pulls back in a 20-day EMA, pop. right? You may have to wait until the latter portion of this because you want to see a trend being established. Another example here is Tesla, right? Tesla doesn't really have a trend until towards the end of it, right? If it breaks it like this and you can't hold a green candle, a 5-minute candle at these areas, this strategy is nullified. Look for something else. Look for a different strategy that may help you, right? Maybe Visa as well, as we're running through these looking for a trend. Visa really well because trend gets established right off the open, right? You're breaking through the prior day tops. So what you're looking for is strength as you pull back into that 20-day moving average, right? Green candle, get long. Green candle, get long, right? And this is a prime example of this 20-day moving average, right? The day before, trend gets established. Where are you looking for the pullback? Happens right at noon. Get long right after that green candle and decent volume. So the key for this, again, it's not going to work 100% of the time. Just because you have the 20-day moving average there doesn't mean it's a buy or a sell. You have to have a trend that's being established in the morning session. So we had a plethora of different examples here that we ran through very quickly. But again, to reiterate, a 5-minute chart, you need a 20-day exponential moving average. You need to be very patient to wait for a trend to establish, typically forming in the afternoon. You want to wait until price pulls back into that trend and forms a 5-minute decent volume. You want to get in around that area for the continuation. Now, if you get long here and you can't break a new top, then you may want to cut the risk and get out of that trade, right? This works very well in trending markets and trending stocks, right? So I hope you guys enjoyed this video. And if you guys want to know more about the cloud, the EMA clouds and how we use them with this strategy, drop a comment down below. But again, remember, this isn't a be-all, end-all, holy grail strategy that works 100% of the time. This is a strategy where you have to be diligent, understand the market structure first, and understand that patience paves the way, especially into the afternoon. So keep that in mind. Good luck trading.